A human wrote this RSI strategy straight from the textbook. Buy when RSI drops below 30. Sell when it climbs above 70. Every trading course teaches it. We gave Claude Code one job, beat it, 11 generations, 497 stocks, and the AI changed exactly one number and got 2.3 times the return. Here is the loop we built to beat the textbook. Claude Code writes a new signal function, Python, with RSI as the primary rule. The evaluator tests it across 497 stocks over 6 years of data. It measures per trade win rate and expected return. If the strategy clears the quality gate, it joins the population. The best survivors get mutated into the next generation. Repeat 11 times. A closed loop. Write code, test it. Select the winners, mutate, repeat. Fitness is one number that scores how good a strategy is. The higher, the better. It has 3 parts. 60% comes from out-of-sample expected return, what the strategy earns per trade on data it never trained on. 20% from in-sample expected return, and 20% from out-of-sample win rate. Out-of-sample is weighted 3 times heavier than in-sample. That punishes strategies that only work on the data they were trained on. In plain terms, it punishes overfitting. The textbook seed scored 7.04. Before a strategy can enter the population, it must clear 3 gates. 1. Win rate above 45%. 2. Expected return above 0, it has to make money per trade. 3. At least 20 trades out of sample, enough data to mean something. Miss any one of these and the strategy is eliminated. All 3 or nothing. First, the indicator. RSI, the relative strength index, measures how overbought or oversold a stock is on a scale of 0 to 100. The textbook rule is a round trip. Buy down at 30, sell up at 70. The AI starts from that exact rule. Same entry, buy when RSI drops below 30. Same exit, sell when RSI climbs above 70. One question, is 70 the right number to exit on, or is the textbook leaving profit on the table? Generation 1. The textbook seed. Buy when RSI drops below 30. Exit when RSI climbs above 70. Win rate, 78.3%. Expected return, 8.96% per trade. 2,478 out-of-sample trades. Gate, pass, fitness, 7.04. The textbook entry signal is already right. 2,400 oversold dips, 78% win rate, a strong baseline. The question is not whether to buy below 30. Can we beat this by changing when to exit? The AI's first move, stop trusting the textbook exit, push the ceiling up. Exit at 65, expected return 6.6%, win rate 78%. Exit at 70, the textbook, 8.96%. Exit at 75, 15.3%. Exit at 77, 20.66%. Now watch both numbers. Win rate climbs 78, 78, 81, 82. Expected return climbs faster. Holding to 77 captures more of each oversold recovery. Both win rate and return per trade rise as we raise the exit. So why stop at 77? Push higher and the fitness explodes. Ceiling at 80, fitness 27. Ceiling at 83, fitness 47. Those numbers look unreal. And that is exactly the problem. Above 77, the strategy almost stops trading. At ceiling 80, only 1,100 trades. At 83, just 800, that is one trade held for years. It is not a signal anymore. It is buy and hold in disguise. We draw the line at 1,000 trades. Exit at 77, with 1,500 real trades, is the last valid strategy before that wall. Now the part that confirms the entry. The AI tested every way to improve the buy signal. Tighter entry at RSI below 25, overfits in sample, out-of-sample quality drops. Wider entry at RSI below 35, more trades, lower fitness. Add EMA 200 filter, only 630 trades, misses the best oversold dips. Add MACD filter, just 36 trades, useless. After 8 more mutations, the AI confirmed it. The buy signal was already right. One number, the exit, that is all the AI needed to change. Generation 3. The champion. Buy when RSI drops below 30. Exit when RSI climbs above 77. Win rate, 81.6%. Expected return per trade, 20.66%. Average winner plus 29.4%. Average loser, minus 17.9%. Fitness, 16.34. 8 more mutations were tested after Generation 3. None of them could beat one number. This is the AI's final answer. Here is the whole run. 11 generations, each dot is a strategy the AI tested. Gray dots failed the gate. Cyan dots passed. Gold dots are the milestones. See the two red spikes at the top, ceilings 80 and 83? Their fitness is off the chart. But those are buy and hold in disguise, not real strategies. Generation 3 sits right below that boundary, the last valid checkpoint. If this is useful, like and subscribe. We run a new backtest every week. Textbook versus AI. Head-to-head. The textbook, buy RSI below 30, sell above 70. Win rate 78.3%. Expected return 8.96% per trade. The champion, same entry, sell above 77. Win rate 81.6%. Expected return 20.66% per trade. Both metrics higher, 2.3 times the profit per trade. One number changed. The entry stayed the same. That was it. Here is what the AI discovered. It did not find a clever filter. It did not find a smarter confirmation signal. It found that the textbook entry was already right, and the exit was the only mistake. The edge in RSI is not timing the entry. It is holding long enough on the exit. Every extra point on the exit ceiling lets each trade capture more of the recovery. Cut the trade short with a filter, a stop, a confirmation, and you capture less. The only lever that matters is the exit ceiling. And you want it as high as you can go, right up to the edge of buy and hold. 3 real lessons from 11 generations. 1. The buy signal was already right. RSI below 30 is the sweet spot. Tighter overfits, wider is noisier. Filters make it worse. 2. Selling too early is the only mistake. Exit at 70 leaves profit on the table. Raise it to 77. That is the entire AI contribution. 7 points. 3. Every entry refinement the AI tried made it worse. EMA filters, MACD filters, lower bounds, all underperformed. Simplicity wins. The strategy the AI kept, RSI below 30 to enter, RSI above 77 to exit. One line. Subscribe to Backtest Lab for a new strategy test every week. The champion Backtest code is on Patreon, link in the description.